Shout out to everybody here on the live stream. My name is Samuel James Price, and every single day I do the Crypto Lifer Show, 10 a.m. to 12 p.m. on Saturday and Sunday nights at 8 p.m. And we do a beautiful live news segment that gives you the news in 3 to 5 minutes and covers all the things that are happening that are the most important for the market and for just where we're headed. So let's break it down. Pepe knockoffs turn dollars to fortunes in strange new 2.0 play. Copies of several meme coins have popped across the board in a trend that is likely to die out within weeks. The latest flavor of the month in some areas of the crypto market is to bet on microcaps that purport to be the second coming of the popular meme coins for those who missed the boat earlier. Tokens like Pepe 2.0, Floki 2.0, and Bobo 2.0, which were mostly issued in the past week, are passing themselves off as new versions of the popular Pepe, Floki, and Bobo tokens. Most of these do not last beyond a few weeks. Last year saw hopefuls bet on articles from the English language and Grimace coin spurred by McDonald's joke tweet. Yep. Anyone can call a smart contract and issue tokens on Ethereum for a few cents, and the presence of decentralized exchanges means tokens can instantly be issued, supplied, and liquidity and traded soon after. As of today, Pepe 2.0, seemingly the most popular of the clones, saw nearly 7 million worth trading in the previous 24 hours. It sported a market capitalization of 18 million, down from a peak of 45 million last week. One wallet turned $900 of Pepe into over $176,000 in less than 24 hours. Analysis showed that the wallet took profits on this position by selling in 2 Ether clips as the token rose, man. What a good move, right? $900 into $176,000 on Pepe 2.0. It can happen. You can get lucky, right? Again, he didn't put a lot. He threw $900. I mean, it's not like he's putting his whole entire savings in there. I'm not a huge fan of 2.0 coins. I'm a fan of anything that can make you money if you got lucky. Like, good for anyone that makes money on these. But the first ones had no use case. These ones have no use case at all, except for saying that they're just as much of no use case as the first one. It's kind of it makes humanity look really stupid, man. It's kind of crazy, like the fact that we can rack up millions in volume in a coin that has no utility at all. But that's my take on it. You take your take on it. But the 2.0 coins are coming. We've been looking at them. People have been asking me for the last few days, so we've been going over them. It is what it is, you know. Bitcoin Ordinals Launchpad proposes BRC-69 standard to reduce costs by 90%. It's a big deal. We have the BRC-20, but we're getting to the BRC-69. You may have never heard of BRC-69, but now you heard here on the channel. Hear about things first that you've never heard about on any other channel anywhere else, because we're the Crypto Lifers and we put our life into crypto. Bitcoin Ordinals Launchpad platform Luminex has proposed the BRC-69 standard designed to simplify the creation of recursive ordinal collections, reducing inscription costs and streamlining the on-chain pre-reveal process. Ordinal developers introduced recursive inscriptions last month, helping to overcome Bitcoin's 4 megabit per block size limitation that restricts the size of NFTs by allowing inscriptions to work together. Previously, Ordinals inscriptions representing tokens and NFTs on Bitcoin were independent of one another, unaware of other inscriptions. Recursive inscriptions can reference the content of other inscriptions using a special syntax. Building on this, Luminex claims a BRC-69 can reduce the cost of inscriptions by over 90%, helping to optimize the Bitcoin block space as the number of inscriptions grow. The reduction is achieved through a 4-step process of inscribing traits, deploying a collection and compiling it, and mining the assets, Luminex said. Interesting. Most people go right over their heads. They have no idea what they're talking about. I get it. To me, it's starting to make more sense. I like that they're actually beefing up the ordinal space. And just like the first DeFi space, it wasn't that easy. But as we continue to grow, more and more tools come to our fingertips. And last but not least, upcoming Ethereum update stimulates liquid staking token growth. Liquid staking providers gain traction as users prefer greater liquidity and flexibility from their staked Ethereum. Of course, liquid staking LSTs have begun to pick up momentum this month as the second half of the year edges closer towards a highly anticipated Ethereum upgrade. Dubbed Cancun DNUB, the Dean Kun for short, the upgrade, expected sometime in the fourth quarter of this year, will see an introduction of a mechanism known as blob carrying transactions. Liquid staking providers, especially Lido, have gained significant transaction underlining users' preference for greater liquidity and flexibility in their staking activities. Blockchain analytics firm Glassnode wrote, the Cancun upgrade could fuel further growth. The next upgrade to Ethereum focuses on EIP 4844, also known as the Proto-Dank sharding, which could effectively allow for larger blobs of data to be transmitted to Ethereum nodes for a limited duration, as opposed to hosting that data permanently on the Layer 1 chain. The data is stored long enough for nodes to demonstrate that providers from the Layer 2 rollups to make sure the transactions for Layer 2 are correct and have done their job. With the upcoming Cancun upgrade, L2 sequencers can anticipate considerably higher profit margins as L1 data costs are set to decrease substantially, Delphi analyst Joe Kean wrote. And that's what you want. I mean, we're seeing more and more sequencers. As Ethereum virtual machines rely on getting that information quicker and faster, sequencers, what they do is they sequence that information, give it to the blockchain confirms it, and then you don't have to hold it on the layer 1. This actually frees up information on the layer 1 and helps transactions get confirmed faster. So this is a good idea. I like what's happening here. And in the wake of the Shanghai hard fork, Ethereum staking landscape has been a significant transformation. The upgrade, which introduced the ability to withdraw staked ETH, basically, created a huge catalyst and a surge in staking deposits, while demand for withdrawals have been scant. Nobody wants to withdraw their ETH. They want to keep staking it, and then getting liquid staking is a big deal too as well.